Now to our first story, the Ghana Statistical Service wants the inequality gap within the financial sector to be bridged. According to the Deputy Government Statistician, Dr. Faustina Frimpong Engwa, financial service provisions should be closer to every part of the country to enable people access resources to improve their livelihood. She made these assertions at the presentation of the 2021 Population and Housing Residential Proximity to Essential Service Report.
The Statistical Service, in its 2021 Population and Housing Census on the residential proximity to essential service facilities, indicates that 57% of residential structures are located more than 5 kilometers from a bank. The service adds that there are substantial disparities in the availability of essential services between urban and rural areas. Here is the Deputy Government Statistician, Dr. Faustina Frimpong Engwa, who says the data is to help bridge the gap between inequalities and vulnerabilities in the financial sector.
GM banks have been closed and other things, but if the structure, the name is still there, right? Even though it's not functioning, still there will be that the person will say it's functioning. The next step that we're going to do is that we ask whether these things are functioning. So that's the next step, that we engage our data to be able to know that these things that we took, the Joy reference code and their numbers, are they all functioning now, or some are not functioning? Again, for us, we do not tell government do A or B, but we put information down for the policy makers to know the right thing to do. At least it's backed by data to be able to have evidence base in order to put the scarce resources that we have into, fruitful use or prudential use. Now, one of the things that we are coming up with, that we will realize that from the UN Declaration Intervention, health is important, education is important, and then security. Financial institution is not part of those human rights, but we think that if people do not have the right resources, they cannot develop or benefit. And therefore, we wanted to look at it so that how best do we take advantage of this to be able to reduce inequalities and vulnerability.
Savannah region has the largest percentage of residential structures, leaving farthest from education. Health services ranking all 6 facilities providing these essential services analyzed, while the Greater Accra region has the lowest percentage of residential structures, leaving farthest from education and health services, ranking first for 5 out of 6 facilities providing essential services analyzed. James Eshen's report for Joy Business.
Well, let's bring in financial analyst and lecturer at the Finance Department of the University of Ghana Business School, Dr. Benjamin Amoah. We're grateful, Doctor, you could join us. Over 57% of residential structures located more than 5 kilometers away from banks. What do you think could be informing the decision by some of these financial institutions to position that way?
Thank you very much. The reason for the decisions of these banks to either locate close or far away from residential structures are a lot. But then again, we may just want to focus on the financial reason for the location of bank branches across residential and commercial areas. So for now, you just need to look at 400 million minimum capital, and having acquired a license, how best do you maximize your return from the 400 million? If certain areas will not give you the needed return, as a bank owner, you may not want to position yourself in some areas that may not give you advantage when it comes to revenue and bottom line. So for now, without having much into the data, I would say that it is just about how much you have to put aside as minimum capital and how best you can maximize your return from the minimum capital, which will influence your decision to locate your branches across the country.
Interesting. But of course, yet again, others could argue this particular submission because we have seen the performance of rural banks and the fact that most of them have even outperformed most of these traditional banks when it comes to the rankings over the past financial year. So moving forward, how best can, most of these banks reorient themselves on the various capital that sits across the rural zones?
Again, you see, the banks will not locate a branch because they have a social obligation to. No, the rural banks have been set up to be close to certain areas. And that is what their license prescribes them to do. The banks are full-fledged financial house centers, and their license does not prescribe to them where they ought to go to locate their branches. So it is more of what they can get out of each branch that they locate. Besides, we have other financial institutions that per their licensing regimes are required to be located at certain areas. The rural bank one, you can talk about the credit union, also have certain provisions or clauses in their license that takes them to certain areas, but not for the bank. As for the bank, they will decide where and when they want to move.
But of course, we're hearing from the Ghana Statistical Service. The Deputy Statistician raised concern about this issue, calling for some decentralization of a sort for these banks to, have their locations there. Does it also beg the suggestion for a review into the licensing regime?
Yeah, we may want to look at the licensing regime, but I see we have the deposit institutions, the taking institutions that per their license have what we call rural banks. So the question we need to ask ourselves is, what are the rural banks doing? Why do we want to force the universal banks to necessarily go and establish branches at the rural areas? Why don't we rather encourage the rural banks to be full-fledged financial houses in the rural areas? That is what we need to be looking at, because our banking regime or the deposit taking regime license has segmented the whole market and assigned certain license for certain types of businesses and certain locations that the business can operate. So we need to look at what the rural banks are doing. And if they're not doing so much, let's look at what we can do to help the rural banks to do much more than forcing the universal banks to go, because trust me, they will not go. They will not go at all. So we need to rather push the rural banks to do it. Again, we want to look at the state-owned banks. The state-owned banks can be directed to consider some of these areas, but for a typically privately owned bank, it will be difficult to push them to some of these areas.
Well, so it also begs the question once again about financial inclusion. Is there a way by which we could also shift the focus from the rural banks as well as the traditional banks? Yes, their inputs are so much needed to much more financial technology along the rural zones. Is there a way by which we could examine or explore this particular niche market as well in deepening financial inclusion?
Yeah, but there is more that we can do. And the rural banks themselves have started deploying some technology-enabled solutions to meet some of the needs of the rural folks. So we need to look at how best we can support the rural banks to use technology to deploy some new services to meet the needs of the rural folks. So there is that opportunity that exists. And we need to help the rural banks to roll out some of these products using technology as the base for this service provision.
Dr. Benjamin Amoah, just before you leave, I want to also take your final thoughts on your perspective on financial inclusion, especially within the rural zones. We've heard from the Ghana Statistical Service, but from your perspective as an analyst, what do you think could be, worsening the statistics each and every time around?
Okay, thank you very much. Financial inclusion is about access, one, and then two, usage. So we need to look at access means how close is the institution from the potential market. And then two, how are the consumers of these services using their product? So it's not just about getting close. It's about usage. So we now need to analyze the usage in terms of credit, in terms of savings, in terms of remittance, in terms of insurance, and in terms of payment system. If we are able to look at this, then we can see clearly whether it is more of access in addition to usage, or sometimes it can be access, but you don't have any usage. And if you don't have the usage, then improving well-being becomes a challenge. So let's look at usage of the financial institutions too.
Great. Dr. Benjamin Amor, we're so grateful once again for your input on this. He's a financial analyst and finance lecturer at the University of Ghana Business School.